Okay, so let's start this session. Now, what is currency? Currency is basically normally used as money or referred as money, and the Forex stands for the full form of Forex is foreign exchange, and it is synonymous with banknote or with banknote plus coins or maybe anything which is a token used for money by a government. So basically you can see money is a medium to value something, to price something, and it is widely used as a mean of exchange. Okay, so previous to money or the currency, we used to have a barter system where we used to value one goods in exchange with another goods. But now it's good. We are living in a very educated society, and thank God we are using currency. Now, the currencies are divided into broadly three categories. One is major currency, then you have minor currency, and then you have exotics. Now, major currencies are normally you have dollar, you have pound, you have Swiss franc, you have euro, you have yen. In fact, you have Australian dollar, we have Canadian dollar. Okay, these currencies are normally major currencies. And then we have minor currencies, all the currencies, small currencies are minor currencies like currency of Bhutan, Pakistan, all those countries. And then we have exotics. Now exotics are also traded widely in this market, like we have INR, sometimes Australian dollar is also referred as exotic currency, and you have other currency like Turkish lira, you have, okay, and some other currencies. So these are like exotic currencies. So we have categorizes. Basically this is a market terminology. People are considering it, we are grouping it, because when you are quoting price for some currency, we make sure that if it is a major currency, the bid and ask spreads are low. And you have, when exotics are minor, the bid and ask spreads are wider. We will discuss about what is bid and ask spread, don't worry. Every jargon which I speak normally, we take care of that in future classes. We definitely discuss on those things. So don't worry. And if you have any doubts, you can pen down your doubt. You can ask me, or you can use the you know comment box there. You can write your doubts, and you can ask me. There's no problem. I'll be happy to reply all those doubts. Now, who all are participating in the market? We have major banks. Major banks mean all the central banks across the world. So we have 160 countries. And same do we have 160 central banks. One central bank almost in each country. Like we have RBI in India, Fed Reserve in USA. And then we have something called a server or a machine which is helping in the transaction across the globe. So normally we have two systems working here. One is electronic broking services, EBS, and another one is Reuters dealing desk 3000 spot machine. Now they have upgraded more. So basically these are two machines through which most of the international transactions goes through. And then we have medium size and small banks, all the commercial banks. Basically we have HDFC, Citibank, HSBC, everything, like every commercial bank. So all those are involved in Forex transactions or trading or maybe business, you can say. Now, then we have retail market makers. Now, who all are retail market makers? Normally currency dealers are called retail market makers. So if you are opening an account and to trade Forex, we are most of the time opening through either a currency dealer, that is the retail market maker, or through a ECN. ECN is a communication network. It works like an exchange, but it is not an exchange. It is a network, like peer-to-peer system. And then we have hedge funds, commercial companies, exporters and importers participating in the Forex market. We also have retail traders like we guys. We have big dreams and a small pocket. No worries, but sometimes obviously in our lifetime we will have deep pockets, not the small pockets. And yes, all our big dreams will come true. So we are retail traders, okay, hoping always positive for ourselves. Now, so as I told you, the Forex market is decentralized market. So we don't have one company or one country, dominating or ruling the entire market. Yes, dollar is a dominating currency, but there is no centralized system like we have in stock market. In stock market, we have hub and spoke model. So we have stock exchange, and with that stock exchange, a lot of stock brokers are connected, and from their servers, all the retail clients are connected through their computers. So they have retail clients, their computer connecting to the server of the brokers, and brokers' computer connecting to the exchange server. So this is hub and spoke. So if the exchange shuts down, no trading is done. Okay. Or if any broker shuts down, all their clients can't trade. But here in the Forex market, it is a decentralized market. So there's no hub and spoke model. Instead, it's like a matrix. Okay, it's a peer-to-peer network. Okay, a peer-to-peer network is like if one peer is gone, okay, remaining seeders can seed. Okay, so it doesn't matter if there's even one single peer is uploading the file, all the seeds can download. So same thing is here. Even once a computer shuts down, on one person is not operating, still the trade will go on because there are plenty of computers connected with each other trading every second. So nobody is ruling or owning this market like we have stock in stock market. So this is a good thing. And it is also not possible because currencies are IPR or the intellectual properties of any country, and one exchange cannot have the rights on that currency, so it's normally not possible to have a exchange, a centralized exchange for all the currencies across the globe. There could be a lot of technical issues. Anyways, now when we are trading in currency, we are actually trading in spot market. We are trading in currency spot, even if you're trading through a dealer. Now we have two markets. We have a spot market, or you can say over-the-counter market, and we have a stock exchange. Okay, so they are two different platforms. So stock market is a stock exchange, and then we have a spot market, which is normally a day-to-day market. So if you're buying groceries from a grocery store, that is a spot market, and that is also called over-the-counter market, OTC trading. So if you are drawing some cash from bank, that is an OTC transaction or a spot transaction. Okay, so when you are trading in Forex market, you are same, you are trading online, but you are trading through a dealer one-on-one. So that is an OTC transaction. So if let's say you go to a bank, let's say you go to HDFC Bank, you give them some Indian currency, INR, and you exchange some dollar. So that is an over-the-counter transaction. Here, the bank is, functioning as a currency dealer, and I'm the customer, right? So that is an OTC trade. Now this is face-to-face, and the same trading you can go online also, but that will still remain an over-the-counter trade because this is one-to-one. So when you are trading one-to-one without involvement of a third party, that is an over-the-counter trade. Now, so what happens in Forex? See, in OTC market, trading occurs via a network of middlemen. These are called dealers, who carry inventories of currencies to facilitate the buy and sell orders of the investors. and they do not provide the order matching service seen in specialty exchange. So in exchange, what happens is there is an order matching system. So what is an order matching system? We'll understand that. Let's understand how dealers function. So let's suppose this guy, okay, this guy is a currency dealer, okay, or let's suppose this guy is a banker, and you want to exchange currency. So you want to sell dollars. You approach bank or the currency dealer, and bank has a lot of inventory of the foreign currencies. So we can say that bank is a stocking foreign exchange or currencies. So foreign exchange or currencies can be treated as commodities. So if I have, let's say, $100,000 with me, so that is my stock or inventory. Okay. So when there is an inventory, we can say currency is also a commodity which can be traded and be exchanged. So this guy wants to sell dollar, the banks purchase the dollar. Okay. And then somebody wants to buy dollars. So banks sell the dollar to the guy. So in this situation, when you are selling the dollar, the bank is buyer to you, and when you are buying dollar, bank is seller to you. So bank is functioning as a dealer which is buying currency and which is selling currency. Now, how the bank makes money? Now, there's something called bid and ask spread, through which the banks make profit. Now, what is bid and ask spread? So what happens is, let's suppose this guy is interested in selling. Okay, so he says, I want to sell dollars, and the bank says, I will buy it for 60. So banks buy for 60. And then this guy says, I want to buy dollars. So bank says, okay, fine, I will sell, and now sell at 61. So this buying price is called normally bid, and this is called ask. And there's a difference of 1. This is called the spread. So we have bid and ask spread both. Right? Now, so there is a middleman, dealer, through which we are dealing. So this is bank. In this example, online we are trading, we have Forex dealers. Now, how the currency is being distributed in the Forex market? So we can see in most of the international transactions, most of them, you can say the 84% is, you can say, transactions are done in US dollars, around 39% in euro, around 19% in JPY, and 12% in GBP, that is Great British pound. Then we have Australian dollar, we have Swiss franc, Canadian dollar, and maybe 25% others. So there's almost there. It is just being distributed in 200%. Now, why it is 200%? Because currencies are always returned in a pair. Currency prices are returned in pair. What is pair? Let's say we have USD, we have Euro, USD. So this is a currency pair. Let's say 1.2505. So this is, I'm interested in buying Euro by paying USD. You can have USD INR. Let's say that is 60. Now what happens in this situation? In both the transactions, USD was involved, right? So USD have a double transaction here. So what happens is, most of the time currencies are written in pairs. So that's why we have this distribution of 200%. So yes, dollar is widely used. Now many people ask me, why dollar? And why dollar is so much, uh, strong currency, and why it is used in most of the transaction. Why China is interested in taking payments in dollar? Why Dubai wants to take payments in dollar? Why they don't want to take payments in INR or some other currency? Why dollar is the king of currency? Now, we will discuss this in upcoming class. I'll tell you how the dollar became king of currencies. It's not about if an economy is very strong, their currency will be also very strong. There are many factors affecting the currency prices. Okay, so obviously the one of the most important factor is demand and supply. And why the demand is high? Because there's several factors affecting. So that's why the demand is high. We'll discuss all those things. So if we talk about the expansion of the Forex market, it flourished after World War II. And you might have idea of the Bretton Woods system. We'll discuss what is Bretton Woods system. It actually helped dollar become the king of currency. And if we compare about the stock market and the Forex market, the stock market still has very less transactions as compared to the Forex market. The daily turnover on New York Stock Exchange is around 22 billion on a daily basis. There's a turnover, buy and sell of shares. And if we talk about Forex market, if we talk about the entire Forex transaction in the United States, that is almost 5 trillion on a daily basis. So that is all OTC transaction. Every transaction counted. It's not the transaction done online in online trading only. They are counting everything, like every purchase and sell of currency, everything. So yes, Forex market is no doubt very bigger as compared to the stock market. One thing good about this market is that it is open around 24 into 5 days. As I'm talking about the international market. So which means any time you want to trade, you can trade. Like it is open 24 hours. But trust me, you cannot trade every currency at any time. See, you can trade. I'm so sorry, let me correct myself. So you can trade every currency at every time, but every currency must not be traded every time. So in one good time, one currency is good to trade and another time frame or time slot, some other currency is good to trade. Okay, that is important because sometimes US market is open, sometimes UK market is open, sometimes the Australian market is open or the Japanese market is open. So we have different time zones and we have different currencies of different currency. They are being traded into that particular time zones. Okay, and yes, the market is open, but if you see the buyers and sellers of a particular country or of a particular currency, they come in a specific time period. So let's say evening times are very good to trade the GBP, Euro and USD, and morning times are really good to trade the Japanese yen, okay, or Australian dollars because of the time zone difference. We'll discuss which is good to trade. Now, why to trade Forex in international market? Now, they have plenty of points here. But trust me, it's not like that. Middleman, list, lot size, fixed, low cost of transaction, all are okay, fine. What do I believe is, the one point is, it is highly leveraged, so it gives you a good opportunity or great opportunity to make a lot of money. The second thing is, I can trade anytime. And the trading platforms are very user friendly. It is very easy to open a trading account and easy to start with. Okay.